You're in for a real treat today. We have Larry Goldberg here with us today, and we'll be doing a very deep dive on the debate of whether Tesla should use its cash for stock buybacks or perhaps save it for further spend needed, like the estimate of $8 to $15 billion needed for AI compute, $10 to $20 billion for Tesla Bot, and $20 billion for Robotaxi, or even perhaps some new market Tesla might need to enter. We'll also go deep on the strategic importance of Elon Musk's focus on operating costs. As a percentage of revenue, Tesla's annual operating costs have fallen from 14.4% in 2018 to 7.2% last year. And as Larry says, this is the best kept secret of the Musk method. So Larry Goldberg is a multi-entrepreneur, and he often does these deep dive analysis. We're really fortunate to have him join us today. Thank you so much, Larry. Appreciate you.
Thanks for having me here, Herbert.
Okay, so first half of this conversation, we're going to go and talk about the use of cash. This is a debate that doesn't seem to go away. You covered it in depth last year. We'll just spend a little bit of time because the world has changed since last year's conversation, even furthering your position back then. And then we'll do the operating costs, which I think is a brilliant analysis that few of our community has been talking about and realizing how big of a strategic importance that is. So let's start off with this. Gary Black says, I equally respect Larry. When we disagree, it's with respect and thoughtfulness and not laden with personal attacks and pettiness. Okay, on buybacks and the need for more equity, Larry and I are diametrically opposed. If we polled 100 institutional PMs, as he's looking at from kind of an investor point of view, who own Tesla today, and asked which would they prefer, A, a raise of $20 billion of new equity, or B, buy back $20 billion in stock, I would bet 90% would answer B. Of course, they would bet that. It's not that we're also against dilution, but rather that anyone who's built a forward-looking cash flow model can see that Tesla's likely to generate $100 billion in free cash flow. And he gives you an example of what the cash flow is going to be forecasted in the future. It is massive, $100 billion. So I guess he's saying, why would we need to restrict our money? That cash is going to just sit there, letting excess cash build up at an ROI far less than the cost of capital. This is his sentence, if left unchecked, this will ultimately cause Tesla's PE to degrade. With cash more is not better. And then lest we forget, management's job is to maximize shareholder value and to reinvest cash at an IRR above the cost of capital. So if there were unlimited internal projects that offer 25% IRRs, then I'd be an advocate for raising more cash. Actually, there is, isn't there, Larry? There is unlimited projects.
That's the whole point. I think Gary's making my point for me. I think what Gary is missing and what all these PMs that he touts would agree with him is missing is that, we are backing an innovator deluxe, one of the greatest innovators that's ever lived. And we're saying, you know what, we prefer you to keep our money and continue to create new businesses out of fresh air. I call it Luftgeschäft. It's a beautiful German word that means, manufacturing out of thin air. And that's what Elon does. And so would you rather withdraw your money to invest in, I don't know, Warren Buffett's cash pile or, Coca-Cola, or would you prefer to leave the money with Elon and have Elon build another incredible business, just as he's added like 2 incredible businesses since the debate began 2 years ago?
Exactly. Yeah, I love it. So, you don't disagree with this, right? This is the forecast for the free cash flow. And the forecast for the key free cash flow is, we're talking, $100 billion if you add them all up every single year. That adds up to $100 billion by 2024 to 2030. So in 6 years, Tesla could have $100 billion in cash sitting there. And he's saying, hey, that's still a lot. What do we do with that money? So you said, okay, I'm going to jump back into the debate. It's like, okay, premise that Tesla have done nothing with the 30 billions on hand other than earn a paltry few percent, and that they would earn a whole lot more by buying Tesla shares from the shareholders. He wants a buyback. The math is compelling because it would reduce total share count. So you agree that, of course, seems like a win-win, right? And you gave a spreadsheet and you agree with us. But life seldom imitates spreadsheets, especially those drawn by onlookers. We should have said
especially drawn by portfolio managers.
Yeah.
Yeah.
Uh, yeah. So here's the breadcrumbs you've been tracking, right? So first of all, this is the requirement for the spend in order to explain this table. Actually, I don't think the table's
So
coming
this
out
is
well.
from our 2022 Investor Day
Yeah.
deck. And this deck really talks about what they saw in terms of requirement based upon storage, vehicle storage, and charging. And so what they're looking at is 150 billion to 175 billion of investment by 2030, of which
Yeah.
they've invested 28 billion to date. And so they need another 150 billion. This is quite apart from operating operating capital needed. So just fixed investment, they're looking at about $150 billion investment. And so right now, if you look at that $150 billion investment, then what Gary puts in his spreadsheet would probably be covered. Not comfortably, not to the point of comfort that I think Elon would prefer, and we can talk about that later, but the math computes that there's enough revenue to come,
Yeah.
that there will be enough money to invest to cover vehicles and storage. That's it.
I love it. I mean, thank you for showing this slide. I appreciate you pulling it out because the thing, he goes, "Hey, we have $30 billion. That's a lot. What do you do with that? Sitting there doing nothing." But then they've take a look what Tesla's doing. They have massive goals. They want to get to 20 millions of cars. Now I don't know if we pulled back from that, but this is their goals that they said at that time: 20 million of cars, 1 terawatt hours.
I don't think they pulled back. I think the stakes are higher now with the new models coming out. I think we're going to grow faster. Yeah, and with what we're doing on energy, it's going to grow even faster than we saw. So no doubt at all.
Yeah, AI jumped. So okay, so what you're saying here is that so you just said that. Since 2022. Tesla's initiated several entirely new businesses. Let's take them in random order. So first one is the bot, the humanoid bot, an idea that Elon germinated in 21-22 is only now taking shape. The business opportunity is becoming clear. Competition to be first out of the gate. This is all critical. There's robotic companies all over, US, China. This is existential for the countries. It's going to be very significant, right? You need to build these brand new factories. It could easily be in the orders of tens of billions of dollars. And then you talk about AI compute. That's going to be huge. And then, so this is just, we already hit this part. We're going to grow faster. 100 exaflops already had to grow. And you need to even get bigger compared to what everybody's doing. And then Robotaxi, you think is 20 billion. So I love this table here, right here. You said this. So 10 to 20 billion just for the bot. 8 to 15 billion just for AI compute, 20 billion just for Robotaxi, totals 38 billion to 55 billion, all of which are going to be needed in the near term. So, in fact,
in the next 3 years, 2 to 3 years, we're going to
which is ahead of what they can generate.
Exactly. This is not to do with cars, and this is not to do with energy. This has to do with the new businesses.
Yeah. So I love this part, which is actually the opposite of what he says, which is not only should you take the cash we have now and buy back today, you're saying,
let's go out and get some money.
You should actually raise cash.
Yeah. I mean, I wanted them to raise cash when interest rates were 1 or 2%. Right now, they're 5%. And Tesla has got such a good name on the street that they could raise money at the bottom of the range of cost of money today, and they can raise it on a variable basis where they could perhaps reduce their exposure. Anyway, they're excellent. They're outstanding at pricing capital, but they should raise. They should raise because I think we need every penny to accelerate these businesses. We need acceleration right now. We don't need to be slowing down. We need acceleration of the car, of the robotaxi, of the energy. Everything needs to accelerate, and we need to expand as rapidly as possible. And there's only one way to do it, and that's with investing cash.
All right. Well, so the other thing that confuses me is Gary has significantly sold a lot of his Tesla stock. It's now 3% of his fund. And it's actually his ownership of Tesla stock is much lower than each of us individually or many other people individually. So
Right.
I guess I'm like, he's going buyback. And like, why, what's going on? How can you
Well,
have
maybe
this?
he wouldn't have sold if there had been a buyback. Look, we are investing in an innovator much like you invest in a venture fund. In a venture fund, you don't start pulling out cash at the beginning of the game. You you even fund your you ride that horse. The horse that actually is succeeding in the race, that's the one you bet on.
Yeah.
That's the one you bet on. So innovation is, it turns the normal investment calculus upside down, and PMs are not in a position to really
Mm.
understand that this is not what they get. They think that investment is like a bank. You put the money in and then you draw out money, each quarter, and you earn your little
Return.
bit.
Yeah.
Invest in Colgate Palmolive, invest in Unilever. These are good investments for this kind of thinking. This is not what Tesla's about. This is not this is not Warren Buffett. This is one of the greatest innovators that has ever lived.
Yeah.
These two businesses that he's just starting that are incipient, this is just the beginning. There are 2 or 3 or 4 more businesses that he's going to start before the end of this
Decade.
this decade.
Yeah.
So why are we taking money away from him? Let's give him more money.
It's incredible, isn't it? Energy
Yeah.
is finally showing us. You got the bot. You're going to do the 3rd generation by the end of this year, and it's going to be 2000 next year. You got
Yes.
Robotaxi about to, to come to fruition. We can do more AI, right? Okay, so let's get to the next topic, which is operating costs. This is what you call, I love it. You say this is the, what is it? A secret, one of the most unknown secrets that Tesla has.
This is the
You
best
want to
kept
explain this?
secret of-
Yeah, let
This is the
me
best
just,
kept secret of Elon
yeah,
Musk. I dealt with Elon's innovation in terms of how he drives costs down, the investment in the rockets and the investment in the cars, how he reduces cost,
right,
and then he goes into mass production first by literally by hand, and then he starts automating once he has it. The number of parts and the cost of the parts as low as possible. And we're going through this right now with the Robotaxi. And, that's a painful process at the beginning, but it results in, this reinvention of everything he touches. That's great, and it's very important, and people are very excited by it, and, it really is good. But what the best kept secret of Elon Musk is how well he operates a company on a day-to-day basis in keeping that company lean and mean. And it's very unusual in a highly innovative, inventor to
mm-hmm.
also have the operating skills to keep that cost down. And, Tesla is the cost leader in vehicles in the United States and in China. And he's the operational leader globally in terms of that company. And so his secret is just watching that operating cost. And the result is Tesla has this gigantic leverage that every additional dollar in the gross profit is a dollar that falls to the bottom line because he keeps his cost of operations as low as possible, and he keeps it at a constant level, even as the margin of gross margin rises. And so you get this gigantic operating leverage.
I love this, Larry, because it's a perfect lead story right after we just talked about the buyback concept, which is I've got extra cash. I don't know what to do about it. That's buybacks, which we're not against that, right? It's just that in this particular scenario, in this particular time, they will do buybacks. Okay. Tesla will do buybacks at some point, and we'll be very happy when that happens. But here you're saying
You'll
that,
be very happy when that happens.
oh, you still, you think never?
When Tesla starts the buyback, it's the signal that, that we're not going to innovate anymore. That
Larry,
Elon's going to sit back and relax and enjoy life. Well, that may be what he does, but suddenly you're no longer investing. You're now investing in, I don't know, Warren Buffett and not Elon Musk.
I get you, but I was just going to say that, what is it, 2 years ago, a year and a half ago, he did say we might do buybacks. So it's not like he himself not again. Okay, let's get back to operating costs. So what you're saying is that because he cuts the cost so much, that gives him cash. That cash he uses for these investments. That's why he's so critical or very important. Why he does it. So I like the way you described this. You said this, right? You're not talking about his, the reducing costs by design of product and process. You've written about that. That's not it. You're talking about the highlighting on his operating costs. This is unlike other Silicon Valley companies. His companies, Elon's, aggressively control their sales, marketing, management, general expenses. And Tesla has consistently trimmed its SG&A, sometimes its manufacturing staff, 2% of headcount, 9%, 7%, 10%. Of course, this year, some people say it's actually more than 10% this year. And so you showed this. So it's fallen from 14.4% in 2018. This is your table, right? It's to now 7.19% of revenue. That's fantastic. Tell me more.
So when you have rapidly growing revenue, when you have revenue that's growing the top line, you have the opportunity to leverage that, because if you can keep your operating costs flat, then that increase in margin each year can fall directly to the bottom line. And so your operating cost as a percentage of your total revenue is going to reduce. And that's what we're seeing there. The problem is, what happens when your operating costs stop, when your gross margin stops rising at that rate? It means that what happens is that the general increase in operating costs, which is part of the life of business, then starts actually showing that the operating cost starts rising as a percentage. That's when you have to control it. And Elon is so disciplined. He is so extraordinarily disciplined that he watches that like a hawk. And as you see, he's absolutely merciless. He says, just cut. And he cuts not out of willfulness, not out of blindness, but out of calculation, looking at the bottom line and looking at the top line and deciding what is acceptable as an operating expense.
Okay. And so you say here, then the last sentence here, each one of these reversals was the trigger for an Elon reaction in 22 and 24, slimming the company's SG&A by issuing a general edict to reduce headcount and rebalance the company. So he's looking at it, like you said, if we look at the operating costs on a monthly basis, we can see that Q1 24 was the proximate trigger to force the layoffs. So you can actually look at these numbers and you can see why he did this. He saw this. Ooh, we're at 9.75% of that month of cost as a percent of revenue. He goes, we got to cut. And he does. I like this, Larry. Now we explain why he does what he does. If you didn't show this, which many people haven't seen this, they just think, like you said, there is Elon going crazy. He's like, when you run into Steve Jobs at the elevator, he gets pissed off at you for no reason, whatever. That's what they think. But in fact, it's different.
Yeah, Elon is really, really driven by numbers. He looks at the numbers, he understands what's happening, and he takes action. And it is so predictable. If you see operating margin creeping up as a percentage, you know what's coming. You know what's coming. And if you don't, you're not paying attention. And I think a lot of people don't pay attention. All they write about, oh, he's cutting costs. And when you go back to 22 when he did that big cut in costs, did you see what happened to all the rest of the?
They followed after like 6 months, a year later.
All the tech companies saw that as permission, and they realized that they'd become so bloated and so out of touch with their costs. They actually, use that as permission to reduce their costs. But Elon has always been in that. And the reason he took over as the CEO of Tesla right back, in 2008, is because the people that he had in the company, running the company, did not understand the absolute essential nature of cost control.
Okay, this is a powerful chart that you put together. We were looking at the monthlies and you decided, you boldly give me an estimate for Q2. You think that operating costs for Q2 for that month, for Q2 is 6.79%. Larry, that is huge if that's the case. So my projected Q2 figure of 6.79%, excludes the one-time reorg cost, would bring Tesla back to the trend line of constant reduction of SG&A, achieved not only by the downsizing, but even more appropriately by the dramatic expansion of energy revenue, demonstrating Tesla's potential. So it's a combination of a jump in revenue, but also a reduction. And so once a new range of vehicles, FSD, Robotaxi, and ultimately Optimus add their bounty to gross profits, I love that, bounty, we can be sure that Elon will be controlling costs, ensuring that operating margins continue to grow. It's the best kept secret of the Musk method. You got a good use of words. Thank you.
Yeah, and that's what's missing from Walter Isaacson's book. Walter Isaacson understood the method in terms of how he squeezes cost and ensures productivity in terms of producing the good, whether it's the car or the rocket. What he missed was Elon's underlying control of the business operations, and he learned it the hard way. I mean, I didn't learn it in my entire career, until my son actually came to run my businesses.
Mm-hmm.
I allowed costs to spiral out of control because I was so focused on the innovation and the top line. And my son taught me about control of the bottom line. But I see it in Elon, and it's very seldom you find this incredible innovator, but this manager with such incredible skill at management. And so I'm in awe of him. And it is his best kept secret.
It is very rare in one person to have both the innovation and the cost control, because the cost allows you to do more innovation. And that's why he's able to add these additional businesses. I once did a kind of like just a very simple tracking of when did Elon start new businesses, whether it's within the company or brand new companies outside. He's now running 6 companies. Remember we did that show last week? It's every 2 years. So it's like people forget. We're about getting to the second year,
And that's why it's so important for Elon to retain these operating profits and this cash, is to give him incentive to put these new ventures into Tesla. The opportunity for Tesla in so many areas is so huge. So don't give away the cash. In fact, let's give him more cash.
Yeah. And when you have these pieces of the business that actually help you develop a competitive advantage, because you have energy, you know how to create batteries, and you've got the bot, the bot needs the batteries, then you've got AI to control that. Then you build another business that all of a sudden no other company in the world could do that business because you got the pieces together. Imagine if the bot can start creating brand new products. If you wanted, I want I want the flamethrower. The bot makes 1 billion flamethrowers for
the cost of building falls to zero, so the opportunity for innovation, explodes. And so, to think that we want to take money out of this incredible skill, out of the hands of this incredibly skillful team, person, individual, it boggles the mind. I spend my life looking for really exceptional investments. And here we have one. And, we should nurture it. We should give it more money and, incentivize it to expand the businesses. So that's why, if you think about all of these things together, that's why it's both great to own the company, but even greater to improve, to expand the company.
I'm getting the sense I need to set up a debate between you and maybe Gary or somebody else who can talk about this, because this is great. We need to have the other side explain to us why not to do this. Thank you so much, Larry. Follow him at Tesla Larry on X. And when you do, and sometimes I miss, he has very long research like this, and it's always brilliant analysis backed by stats and data and graphs. Thank you for putting those together, Larry. Talk to you soon.
Thanks, Herbert. Great B. Yeah.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.